when the dollar really does start collapsing, I think you will find the Chinese are in a position to immediately announce a fixed exchange rate between the yuan and gold in order to stop their own currency sliding along with the Western currencies, led by the dollar. So, in my mind, it is actually quite clear that there is a new world out there which we are not involved with, and it is based on Chinese yuan that will become the principal currency replacing the dollar. And at some stage, it will be guaranteed by gold. And that, I think, is very, very important to understand.
Gold price slides as USD regains confidence post-NFP. Gold prices are extending losses against the US dollar on Friday, falling below prior psychological support, now resistance, at 3,350 after the US Nonfarm Payrolls report showed a resilient labor market. After a week of data suggesting a softening U.S. labor market, the non-farm payrolls report for May surprised to the upside. The U.S. economy added 139,000 new jobs, beating analysts' expectations of a 130,000 increase. Meanwhile, the unemployment rate remained unchanged at 4.2%, offering a mixed but slightly more optimistic view of labor market conditions. The stronger than expected headline figure has provided temporary relief for the U.S. dollar, easing concerns that the Federal Reserve may need to act quickly with rate cuts. However, underlying softness in other employment metrics earlier in the week continues to warrant caution in the broader policy outlook. According to the CME FedWatch tool, the probability of a July rate cut has dropped sharply to 16.5%, down from 33.9% prior to the release. The data has temporarily eased pressure on the Fed to act swiftly, suggesting that policymakers may adopt a more patient stance in the near term. Although Thursday's phone call between Chinese and U.S. presidents helped ease immediate fears of an escalating trade war, tariff uncertainties and broader trade tensions remain a key concern for global investors. The U.S. decision to double tariffs on steel and aluminum imports to 50%, which was enforced on Wednesday, has drawn sharp criticism from key trade partners, including India, Canada, the European Union, and Mexico, all of whom have threatened retaliatory measures. With trade negotiations expected to continue into next week, the risk of prolonged disputes looms. Should talks break down or tensions escalate further, the global economy could face renewed headwinds, potentially weakening equity markets and driving demand for safe haven assets such as gold. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
We've seen gold go from the west to the east. I mean, this was, a story which is that's 20 years old, that story now. So there's an awful lot of gold has gone into China, and not only that, but nothing comes out of China. I've spoken with directors of the Swiss refiners, asked if they ever see any Chinese refined bars, and the answer basically is no. There was a report of a few bars turning up, and it was thought that those were smuggled out. But, basically it's Hotel California for gold. So there's an awful lot of gold, both owned by the state and also owned, and not declared as reserves, incidentally, owned by the state and also owned by Chinese nationals. So how much it comes to, I really don't know. But you can see that China has a huge interest in the price of gold, if you like, and she has a huge disinterest in the dollar. So really what she's trying to do is she's trying to run, with Russia and Shanghai Cooperation Organization and BRICS, all these parties, she's sort of, if you like, dividing a world into a sort of schism between East and West. And the one thing she wants, if you like, is control over the settlement means for all the commodities she buys, the things that she imports and the things that she exports. And so she wants to do away with the dollar. And part of this is having control over gold markets. And that is why, it's one very good reason why anyway, that now that she, is de facto controls the physical gold market, she now wants to take away, if you like, the paper control, which is very, very much a dollar story. So that's one aspect of it. The other aspect of it, if we go back to what the Marxist universities taught, the Chinese students about how the capitalism would destroy itself. Well, obviously, it destroys itself. The currencies get destroyed, particularly if they're not attached to gold. In other words, if they're just fiat currencies, they will go down the Swanee River as well as capitalism. Now, we can see the conditions whereby this is now going to happen to the dollar. Now, I think as far as the Chinese are concerned, they've expected this. This doesn't surprise them at all. But the election of President Trump, as far as the Chinese are concerned, is accelerating the process of the death of the dollar, simply because he's a spendthrift. We've got that big, beautiful bill going through at the moment, which will probably add, take that budget deficit up to something like 2.5–3 trillion. You've got an economy which, really, when all is said and done, is not behaving very well. It's probably in recession, and it is particularly in recession if you take out government spending. In other words, it's only government spending, unfunded government spending, which is actually giving the illusion of an economy which is growing. Take that out, and you've got a contracting economy. And it's been like that for a few years now. Now, this matters because of all the debt which has got to be funded. And you're going to see interest rates rise. And this is why the long end of the US Treasury market, nobody can really raise anything out of it. I mean, the government has auctions, and they sort of continually disappoint or fail or whatever.
In today's news recap, silver jumps to highest level in 13 years following gold's 2025 rally. The price of silver moved sharply higher Thursday morning and hit its highest level in more than a decade. Silver futures rose as high as $36.27 per troy ounce on Thursday, notching the highest price for the metal since early 2012. Silver futures were last up more than 3% on the day at $35.81 per troy ounce. Silver has been a high-performing asset in 2025 and is now up more than 20% year to date. That is still lagging the move in gold, however, which has jumped about 28%. The price of gold was down slightly on Thursday, meaning silver's rally closed some of the gap between the two. Silver has industrial uses, including in solar panels, and is also seen by some investors as a defensive precious metal similar to gold. A recent survey from the Silver Institute estimated that the supply of silver was about 15% lower than demand in 2024 and projected another deficit in 2025. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering US coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
And so foreign investment, if you like, in dollars. I mean, they've got too many dollars. They don't want to have any more. If anything, they want to sell some. They want to reduce their exposure to the dollar. And it's not just China. Most of the countries, if you like, in the sort of China Russia camp, see the dollar as a weaponized currency. They would rather not have, if you like, the risk that the dollar exposes them to. So you can see that the dollar is on a very slippery slope. And of course, this is why gold is rising. It's not so much gold rising, it's the dollar going down. But as far as China is concerned, they need to protect their own currency from a collapse of the dollar, which is becoming more imminent. And I think that informs their recent moves, which basically are they've said that they will open, or at least the Shanghai Gold Exchange, which is completely under the control, incidentally, of the People's Bank of China. They've said that they will open a vault in Hong Kong, and they have also said that they will open a vault in Saudi Arabia. Saudi Arabia, why? Because Saudi exports a lot of oil to China. Saudis want to be able to trade yuan for gold and gold for yuan. I mean, quite obviously, because of their trade. And I think you may well see other ones, other vaults being opened. This is all part of the internationalization of the yuan. And then only, last week or 8 days ago or whatever, it was announced by the Shanghai Futures Exchange that they would open up the futures exchange in Shanghai to foreign participation. Now, a foreign bank can deal on the Shanghai Futures Exchange at the moment, but it has to do it through a Chinese entity. That is all going to go. So, and this is obviously not just gold and silver, it's also base metals. There was the nickel problem, if you like, in London when a whole load of trades had to be cancelled by the London Metal Exchange. That was, a bit over a year ago now. So they want to take control over all this, if you like, at least to their advantage. Now, I think that one of the points behind the internationalization, if you like, the mobilization of gold as part of a trading situation, if you like. I mean, trading not fixed at this stage to the yuan, but obviously trading alongside the yuan at some stage. When the dollar really does start collapsing, I think you will find the Chinese are in a position to immediately announce a fixed exchange rate between the yuan and gold in order to stop their own currency sliding along with the Western currencies led by the dollar. So I think this is all after President Trump's Liberation Day. I mean, bear in mind that the reaction from the Chinese was uncharacteristically quick. The first announcement that came out was that they were going to speed up the negotiations for a free trade agreement between China, Japan, and South Korea. And then this was rapidly followed by President Xi visiting some of the leading ASEAN nations, which are basically the other nations, if you like, in Asia, in Eastern Asia. I mean, I think I can't remember, he went to Myanmar, he went to Vietnam, he went to Malaysia rather, and I think he went to Thailand as well. So now this was quick. Now I'm fairly sure that the conversations that he was having was really about very quickly establishing a plan B, if you like. When America, started raising all these tariffs, this tit for tat tariff sort of thing, China needed to protect herself. She needed to secure her regional market, if you like, and that's what that was all about.
What do you think of Alasdair's take? Is he spot on? Will the BRICS nations' master plan come to fruition, or is all this nothing more than conspiracy theories? Post in the comment section down below your honest opinion and share with the stackers if you're accumulating more gold and silver on this run-up, or if on the other side you're taking profits. Thanks for watching. Now check this video right here because it's a perfect fit for you, and I'll see you on the other side.